Welcome to our fourth quarter 2025 market recap. As we close out the year, global markets have navigated a landscape full of disruption, tariffs, AI innovation, and even a weaker US dollar, all playing major roles. I'm Angela Palacios, partner and chief investment officer here at the Center for Financial Planning. Joining me today will be Nick Boguth, senior portfolio manager. Inflation continued trending toward the Federal Reserve's 2% target, and bonds quietly rallied as interest rates were cut. Equity markets broadened beyond mega cap tech being the major driver of returns, with cyclical sectors regaining strength thanks to improving global demand. The S&P 500 finished up nearly 18%. International markets surged over 32%, while bonds gained more than 7%. Quite the turnaround from April, when U.S. stocks were down almost 20%. Starting in the fall, the Federal Reserve adopted a more accommodative stance, cutting rates by 75 basis points late in the year. Inflation sits around 2.6%, unemployment at 4.6%, both trending in ways that gave the Fed confidence to ease policy and cut rates. Municipal bonds have been the hidden gem in 2025. Despite short-term rate cuts, longer-term muni yields actually rose due to high issuance and tax uncertainty, creating attractive opportunities for high tax bracket investors. We often get the question, are we worried about a recession? Small company stocks can be an important indicator of this. You often see them starting to pull back ahead of a recession, as economic difficulties usually show up for them first. The Russell 2000 is a good index to watch for this, and with the positive returns we saw last year, at least this indicator is pointing to no likely recession on the horizon.
Thank you, Angie. We're covering a lot of ground here, but we can't have a commentary without including one of the hottest topics of the year, artificial intelligence. We saw companies making huge investments into AI this year, and tech stocks leading the way as the best sector in the S&P 500. This is a trend we'll continue to monitor going into 2026. Even compared to US tech stocks though, international was quietly the even bigger story. International stocks outperformed their US counterpart by 15%, ending the year up over 30%. That is one of the biggest periods of outperformance we've seen in the past couple of decades. Other asset classes that showed some serious volatility were some alternative investments like Bitcoin, gold, and precious metals. Bitcoin made record highs mid-year, only to fall 30% and end 2025 slightly negative, while gold has its best year since the late 1970s, a time period I obviously remember very well. Finally, we leave you with an update on analyst expectations from last year and going into next year. Ultimately, no one can predict something as random and volatile as the stock market's one-year performance. Just look at their track record for proof. But it is good to know what investors and institutions are expecting and what is baked into stock prices. Analysts are generally bullish going into 2026, which is probably how it should be, given over 70% of years in the stock market have been positive. But we believe it is best to stick to our process, stay diversified, and proceed with caution given this optimism and the market's current near record high valuations. Thank you for listening. Please see the written commentary for more detail on any of these topics, and we hope you have a great 2026.